New home sales jumped 9.6% in the month of July. That was more than forecast and the most since early 2005. For reaction on his outlook, the housing market, we're joined by Patrick Newport. He's housing economist at IHS Global Insight. Good morning to you, Patrick. Now the number of houses sitting on the market's at the lowest level that we've seen in 16 years. Can you look at that and say we're bottoming now?
Yes, I think we're hitting the bottom of the housing market. The question is about the strength of the recovery and how much this credit is having on sales, starts, and prices. We don't know, but the Cash for Clunkers program is telling us that these type of programs can have a powerful impact, but if they do, there will be payback in 2010.
Well, talking about programs, you highlight, of course, the expiration of the tax credit 3 months from now, in the month of November, and doing away with somewhat of an incentive to go out and purchase one of these homes right now. So are we going to see a drop-off in sales in November, or do you think we've limped through?
Well, I think we are going to see a drop-off in sales. The question is how large this drop will be. And I don't think anyone has a good handle on it. We won't know for a couple of years until the IRS processes the tax returns and tells us how many people took advantage of this credit. But my sense is that it accounts for a lot of the strength that we're seeing in the recent housing numbers.
But when we're right now looking at foreclosure signs right now, we've seen new estimates out from the White House and the Congressional Budget Office yesterday forecasting unemployment upwards of 10% ahead of us. Can you anticipate that level of unemployment and still remain hopeful in terms of a rebound in housing? I mean, how much of a corollary is there between unemployment and housing purchases? I'd imagine it's fairly high.
Well, it has some impact. It mainly has an impact on foreclosures. The encouraging thing about the latest foreclosure numbers is that the increments in the second quarter weren't that large, and that's telling us that we may be nearing a peak. But foreclosures will probably keep on rising as long as the unemployment rate is rising. I don't think it's going to have that much of an impact on starts and sales. It will have some impact. I think the rebound we're seeing is for real, but the question again is how much this tax credit is having on demand.
Do you believe that could create another leg down when that tax credit expires in November?
Well, yes, I think we're going to see a drop in sales and perhaps maybe not a drop in housing starts, but a reduction in the growth rate. I think the rebound in housing starts has legs and it's going to continue because we have to put up new homes and the inventory number is coming down. But yes, it will have an impact. We just don't know how large of an impact it will be, and we won't know until January.
And the last factor there, of course, is pricing. I mean, how can people really estimate their own net worth when they don't know the value of the home they're living in and still seeing those prices decline?
Right. That's the encouraging thing about the numbers that came out yesterday, and that is that the housing prices are starting to grow again, which means that this wealth effect that has been a drag on consumer spending may start working the other way again. The stock market is up and house prices bottoming. That may get consumers to spend a little bit more. So the pricing numbers were very encouraging.
It's still 15% lower than where we were last year, but certainly in the near term we are seeing a bit of a bounce back in that pricing.
Right. The important thing is that prices have seemed to be bottoming out. They're down to where they were. They're probably below their fundamental value, so they're going to they may be nearing a bottom. That's what the data is telling us, and that's great news.
All right. Thank you so much, Patrick Newport of IHS Global Insight.